Welcome. In this video, can Zbcn coin really make you a millionaire? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze Zbcn.
Fibonacci levels are one of the most commonly used technical tools by investors when analyzing price movements in financial markets. And especially, Fibonacci lines drawn from the bottom to the top play a critical role in determining possible retracement and reaction points of the price. In this context, Fibonacci levels drawn from the bottom to the top help us predict at which points the price may find support and at which points it may react within an uptrend. The 0.382 level is generally considered the first critical support point where the price may pause during short-term pullbacks. If the price breaks this level, it is understood that the market is going through a short-term test of resistance or support, and this breakout is evaluated by investors as the possibility of the price heading to the next significant level. In this scenario, when the 0.382 level is broken, the next target of the price is usually considered to be the 0.618 level, which has the potential to be a strong reaction or support point. The 0.618 level is a very important psychological and mathematical point in technical analysis because the 61.8% ratio, one of the natural ratios of the Fibonacci sequence, has historically been a frequently observed retracement point in price movements. As the price approaches this level, it represents a period where buyers and sellers begin to psychologically balance. For buyers, this level offers an attractive entry point, while for investors who witnessed the previous rise and want to take profits, it increases selling pressure. Therefore, the 0.618 level is considered a critical area in determining the market direction, and investors closely watch whether the price will react at this point. As the price moves from the 0.382 level toward the 0.618 level, the dynamics of market movements are very important. During this process, volume, momentum, and other technical indicators provide investors with clues to evaluate the reaction of the price. If strong buying momentum is seen as the price approaches the 0.618 level, the likelihood of a bounce increases and the price may start an upward move again. On the other hand, if significant selling pressure forms at the 0.618 level, the price may experience a short-term pullback, indicating increased risk in the market. At this point, Fibonacci levels not only show possible targets, but also serve as a major aid in understanding market psychology and participant behavior. A price reaction from the 0.618 level is interpreted by many investors in technical analysis as an important entry or exit signal. Investors planning to buy at this level see the short-term retracement as an opportunity and open their positions. At the same time, investors closely monitoring this level may recognize that a new upward wave is about to begin if the price reacts. Thus, a price approaching the 0.618 level is not merely a mathematical level, it is also a critical point where market psychology and investor behavior are intensely observed. In this scenario, the move that starts with the break of the 0.382 level and advances toward the 0.618 level shows that the price is moving within a trend and that investors can take positions by following this trend. In technical analysis, such levels are fundamental tools for investors to plan risk management, set targets, and anticipate possible reaction points in the market. In addition, Fibonacci levels not only help understand short-term movements, but also guide whether medium and long-term trends will continue. For example, if the price reacts from the 0.618 level and starts moving upward again, this can be interpreted as a strong signal that the current uptrend is continuing. Market participants closely monitor price behavior at these levels because Fibonacci levels are often followed by major investors, and therefore high-volume trades may occur around these points. As the price approaches the 0.618 level, it is further strengthened or weakened by the buying or selling decisions of large players. This interaction makes the dynamic structure of the market more apparent and plays an important role in how investors manage their positions. The key point here is how the price reacts at the 0.618 level. If it finds strong support, this indicates high buying interest in the market and a strong probability of trend continuation. The price approaching the 0.618 level is also an important reference point in terms of risk management. Investors may set this level as a stop loss or target point, thus minimizing their losses in case of possible adverse movements. In technical analysis, these levels are not only potential retracement points, but also critical areas that shape investors' strategic decisions. In addition, The expectation of a possible reaction at the 0.618 level helps investors enter the market more prepared psychologically, prevents panic selling, and provides a more disciplined investment approach. If the price reacts from the 0.618 level, this move can often be the beginning of a shift toward the next Fibonacci levels. For example, a reaction from the 0.618 level may push the price first to the 0.5 level, then to the 0.382 level, or, conversely, carry it even higher if the trend continues. This process creates opportunities for investors to optimize their short, medium, and long-term positions. In addition, these levels create a common language among investors. Since everyone is following the same mathematical reference, the predictability of market movements increases, and investors can make more informed decisions. In summary, in a Fibonacci retracement drawn from the bottom to the top, the breaking of the 0.382 level and the price approaching the 0.618 level is an extremely critical process for investors in terms of technical analysis. These levels are of great importance in understanding market psychology, buyer and seller behavior, and possible retracement points. The expectation of a reaction from the 0.618 level is interpreted as a strong sign that the price may start moving upward again, and investors carefully watch this level to manage their positions. Therefore, Fibonacci levels are not only a technical indicator, but also a powerful analytical tool that shapes market psychology and investor behavior. A reaction from the 0.618 level is both an opportunity and a warning for investors. If the price bounces upward from this level, it means the trend continues and buyers are dominating the market. However, if the price breaks this level and starts a downward move, it shows that the trend has weakened and selling pressure has increased. At such critical levels, investors strategically take positions or manage their existing positions by also considering technical indicators and volume analysis. As a result, when Fibonacci levels are drawn from the bottom to the top, breaking the 0.382 and approaching the 0.618 makes it essential to understand market behavior and act accordingly, which is one of the cornerstones of successful investment strategies. But we can't make decisions based on Fibonacci alone, so let's also take a look at other metrics. Keep watching.
The existence of such an ascending channel is an extremely critical indicator in terms of technical analysis for understanding price movements and predicting the potential future direction. An ascending channel can be defined as a structure where the price moves between two parallel lines and generally indicates an upward trend. The lower and upper boundaries of this channel serve as both support and resistance points for investors. When the price approaches the lower band of the channel, buyers step in and push the price upward. When the price approaches the upper band, sellers intervene and cause a pullback. In this context, the midline of the ascending channel is a critical reference point for determining whether the price will continue its upward movement. Breaking above the midline indicates that the price has started moving toward the upper band, and from this point on, the probability of the trend continuing strongly increases. Breaking above the midline of the ascending channel is an important signal for investors, both psychologically and technically. From a technical perspective, breaking the midline shows that the price is maintaining its current upward momentum and has set the upper band as its target. This creates an opportunity for investors to confidently increase their positions or look for new entry points. Psychologically, breaking the midline demonstrates that buyers still dominate the market and that the likelihood of the trend breaking is low. At this stage, investors gain confidence that the uptrend will continue and may strengthen their positions. The structure of the ascending channel shows that the price is moving within a certain discipline and that if specific levels are broken, the potential for an upward move is very high. When the price breaks above the midline, it is expected to move toward the upper band, and in technical analysis, this move is often considered to be equal to the length of the channel. For example, if this upward move corresponds to an increase as large as 2,300%, it creates an enormous profit opportunity for investors. Especially if you hold a sufficient number of units, this potential rise could significantly strengthen you financially and present a concrete opportunity to become a millionaire. Such situations carry great importance for investors both strategically and psychologically, as the direction of the trend and the size of the move directly affect their future gains. When the price breaks above the midline of the ascending channel and moves toward the upper band, it's a critical indicator confirming the strength and momentum of the trend. This movement shows that the market is under upward pressure and that buyers are maintaining dominance. In technical analysis, the upper band of the channel is generally considered a short-term target, and when the price reaches this point, investors can both realize profits and observe whether the trend will continue. The move above the midline and toward the upper band is a strong signal showing that buyers are active in the market and that the trend is sustainable. This upward movement is also important in terms of balancing risk and opportunity for investors. When the price breaks above the midline and moves toward the upper band, it increases the probability of the trend continuing while giving investors the chance to optimize their positions and manage risks. Especially when there is such a massive potential increase, holding a sufficient number of units allows you to maximize the benefits of this opportunity. In this context, technical indicators and the channel structure provide concrete data to support investors' strategic decisions. The price breaking above the midline of the ascending channel is a sign that confirms the trend is healthy and strong. This process is critical for investors to understand market behavior and anticipate future movements. The direction of the trend and the size of the move enable investors to adjust their positions and maximize potential gains. Especially the potential for an increase as large as 2,300% requires investors to strategically take advantage of this opportunity. Breaking the midline of the ascending channel is a technical signal confirming the price's move toward the upper band and provides a reliable reference point for investors. This shows that the current trend in the market is strong and that the price may continue to face upward pressure. From a technical analysis standpoint, breaking the midline confirms that the trend is sustainable and signals a period when investors can increase their positions. The movement of the price within the ascending channel shows that the market is progressing in a disciplined manner and that certain levels are critical. Breaking above the midline confirms that the price is moving toward the upper band and that the trend is strong. At this stage, investors can evaluate the potential of the price, strengthen their positions, and adjust their strategies in line with long-term profit goals. In the structure of the ascending channel, breaking above the midline shows that buyers are still strong in the market and that the trend has not been broken. This situation provides investors with both psychological confidence and an important technical reference point. The move toward the upper band indicates that an increase equal to the length of the channel is possible and that potential gains could reach as much as 2,300%. If investors hold a sufficient quantity of assets, this situation can turn into an opportunity big enough to make them millionaires. Breaking above the midline of the ascending channel is a sign that confirms the continuation of the trend and the upward momentum of the market. After this level, the price reaching the upper band gives investors confidence both strategically and psychologically. The upper band of the channel is seen as a short-term target, and when the price reaches this point, investors confirm the strength of the trend. In the structure of the ascending channel, the price breaking above the midline and moving toward the upper band is a critical indicator that enables investors to take advantage of market opportunities. This process shows that the trend is sustainable, that buyers are still strong, and that the price has high potential to continue moving upward. In technical analysis, breaking the midline provides investors an opportunity to strengthen their positions and follow the continuation of the trend. The movement of the price within the ascending channel shows that the market is progressing in a disciplined and orderly manner. Breaking above the midline is a sign confirming the strength and momentum of the trend, and is an important reference point for investors. Moving toward the upper band shows that a rise equal to the length of the channel is possible, and that potential gains could reach up to 2,300%. If investors hold a sufficient quantity of assets, this rise could significantly strengthen them financially and create millionaire-making potential. In this context, Breaking the midline of the ascending channel is not only a technical signal, but also a critical indicator shaping investors' strategic decisions and determining their future profit potential. Breaking above the midline of the ascending channel and moving toward the upper band is a critical indicator that confirms the continuation of the trend and provides confidence for investors. This process shows that the market continues its upward movement, that buyers are still strong, and that the price can reach its potential profit targets. Investors can strategically take advantage of this opportunity and, depending on the amount of assets they hold, achieve significant gains.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.